What is accounting? Accounting is the process of recording, summarizing, and interpreting financial information so as to assist stakeholders of accounting information in making informed decisions. Okay, who are the stakeholders of accounting information? The stakeholders of accounting information are those parties who influence or can in turn be influenced by the figures which are being presented in the financial statements. Now, we are saying that financial statements or accounting information is being prepared because of the fact that there are certain people who are interested in this information. These persons are what we describe as what stakeholders of accounting information or users of accounting information. Users of accounting information or stakeholders of accounting information are those parties who can influence or can in turn be influenced by accounting information. Let's look at the users. For instance, shareholders. The shareholders of the company are interested in the financial performance, position, as well as the cash flow situation of the company. The owners of the shareholder of the company are those who legally own the company. And since we understand that the separation of ownership and control from the management of the company, it entails that it is very important that the shareholders of the company should be able to see at the end of the period from the accounting information to know whether their company is performing well or not. At the level of customers, customers are those parties who are trading with the organization. These customers are equally interested in the financial in accounting information. Why? Because they want to be sure that the company they are doing business with will continue to exist for the foreseeable future. We're saying this because at times customers can performing well or not. If the company is performing well, means the company is presenting good profits, it means that the customers will be very confident in dealing with that company because they know that the company will continue to exist for the foreseeable future. We have the government. The government is interested in accounting information. Why? Because they want to know the amount of taxes which are being paid by the company and to ascertain whether the company is paying the correct amount of VAT or company tax or income tax, etc. So basically the government is interested in the accounting information because they want to be sure that the company is declaring and paying the correct amount of taxes to the government, because you understand that tax is one of the main source of government revenue. Explains why the government is always very interested in viewing and reading the financial statements or the accounts of a company. We equally have another class of stakeholders who are lenders. Lenders are like banks or other third parties who have given loans to the company, or maybe the company is still planning to take a loan from these lenders. Lenders want to read the financial statements of the company. They want to know how the company is performing. Why? Because they want to be sure that even if they are granting any loan to the company will be able to pay back. If, for instance, the company has been reporting a lot of losses for the past financial period, and then it foresee that they will still continue to make more losses in the future, lenders or like financial institutions such as banks will not be willing to grant loans to that institution. Thus, the primary purpose of lenders being interested in the accounts of a company is that they want to be sure that any facility, any loan, or any credit facility that they grant to the company, that the company will be able to pay back. Now, I've explained that accounting is the process of recording, summarizing, and interpreting financial information to assist users of the financial statements And we have already looked at the users of the financial statements. Now, let us look at how accounting information is being recorded and the various documents or source documents which are used in recording accounting information. First of all, we must understand that whenever a transaction occurs within the company, it is first of all recorded in some documents which are referred to as books of prime entry. What are books of prime entry? Books of prime entry are those business documentations or those accounting documents where transactions are initially recorded whenever they occur within the organization. Let us look at some of these books of prime entry. The first book of prime entry is what we call the sales day book. The sales day book is a book of prime entry which records all sales that are made by the organization on a routine basis, which means that all credit sales are recorded in what we call the sales day book. Another book of prime entry is called the purchases day book. The purchases day book is a book of prime entry which records all credit purchases. I've already explained that the sales day book records all credit sales, while the purchases day book records all credit purchases. Now we have another book of prime entry which is what called the cash book. The cash book is a book of prime entry which records all cash transactions, which means that any transaction within the organization which leads to the receipt or payment of cash must be recorded in the sales day in the cash book. Now we equally have what we call the sales retains day book. The sales retains day book is a book of prime entry which record returns of goods which were previously sold on credit. We equally have what we call the purchases retains day book, which is a book of prime entry which records all purchases of goods, all returns of goods which were previously purchased on credit. From here, you'll be able to understand that these are what we equally refer to as source documents. This book of prime entry, like I've explained, this book of prime entry, once you receive your source documents, you need to first of all book these entries in these books of what? Prime entry. And I've explained that these books of prime entry are those books in which transactions are initially recorded whenever they occur within the organization. And we have realized that we have learned how accounting information is being recorded by maintaining books of prime entry. Now, at the end of when we do this on a daily basis, at the end of the month, we will be able to reconcile our books of prime entry and to obtain the total value of sales or credit sales or credit purchases or sales returns or purchase returns at the end of the month. Now, when we have obtained all these balances from the books of prime entry, now we need to summarize this information. I have explained why we record accounting information. I've said after recording all accounting information, the next step is that we need to what? We need to summarize this accounting information. And we summarized accounting information by preparing and presenting what we call financial statements. Financial statements are those documents which are prepared by the accountants at the end of the financial period to present to the shareholders of the company and other stakeholders how the company has performed over that period or at that given period in time. So let us look at the main financial statements. The first financial statement that we're going to look at is what we call the income statement. This income statement was previously called the trading profit and loss account. Now, the trading profit and loss account or the income statement is prepared and presented to the stakeholders of accounting information to enable them understand whether the business is profitable or is loss making. When I talk about profitable, it means that the total revenue generated over that period is greater than the total cost which has been incurred during that period. If the total revenue generated is greater than the total cost, we say that the company is generating a profit. And if the total revenue is less than the total cost incurred during that period, we say that the company is making an accounting loss. We are going to look at the various elements that are being recorded in this income statement or in this trading profit and loss account, as well as how they are, as well as the format of this statement and how they should be presented in this statement. The second financial statement we're looking at is what we call the balance sheet or the statement of financial position. This balance sheet or statement of financial position is a financial statement which shows the financial position of a given company at a period in time. And this statement of financial position or balance sheet will record all the assets, liabilities, capital, and any credit facilities which have been taken by the company from third parties during that period. In our subsequent section, we're going to look at what assets are, the various types of assets, liabilities, the types of liabilities, both long-term and short-term, equity, as well as other components of equity. Now, we're going to look at the next statement of financial statement, which is statement of cash flow. The statement of cash flow is a financial statement which is prepared to illustrate the movement of cash within that, or to present the cash position of an organization over a given period of time. We are going to learn how to prepare and present this statement of cash flow, or either using the direct method or the indirect method, and the format in which it is supposed to be presented, as well as the classification of the various components under this statement of cash flow. Now, at the end of the day, after preparing financial statements, we understand that many of the stakeholders who will be reading this financial statement really do not have a lot of knowledge in accounting. So what we do is that the last thing after preparing and presenting this financial statement, we equally add what we call notes to the financial statements. Notes to the financial statements are those information which are added after the financial statements have been prepared. Is simply an explanation on how the figures and the numbers which have been presented in our financial statements have been arrived at. So we try to explain and make the users of the financial statements to understand how we were able to arrive at all the figures which have been presented in our financial statements. In essence, we are simply trying to explain to the users of the financial statements how the financial statements were prepared, so that based on that, it will be very easy for them to understand what we have presented in our financial statements. Secondly, we equally want to look at the types of accounting. We have three different types of accounting. We have what we call financial accounting, cost accounting, and management accounting. In most big multinationals, the cost accounting and management accounting function are always combined together, but that does not mean they are not different. Now, financial accounting is different from management accounting and cost accounting, in the sense that financial accounting is purely involved with the preparation and presentation of financial statements that will assist users in making informed decisions, and most of the information that is prepared from financial accounting purposes is for external users. Now, at the level of cost accounting is actually involved with the calculation and ascertainment of the cost of a particular cost unit or cost center, which means that at the level of cost accounting, you are simply involved with the calculation of cost, either of a product, a service, and all these products or services in cost accounting are always referred to as what? A cost unit or cost center. Now, management accounting is actually involved in with the using of cost accounting information to facilitate management in decision making. So basically, after the cost accountant has prepared and presented their data, the management accountant now will use this cost accounting information in advising the management on what should be done as far as cost is concerned. I just wanted you to have an intro as to what accounting is all about, the users of accounting information, how to record accounting information, stakeholders of accounting information, branches of accounting information, books of prime entry, as well as how to summarize data. In our subsequent lessons, we'll be teaching you guys how to prepare and present financial statements, how to record financial transactions, how to summarize financial transactions, and how to interpret these financial transactions as well. So kindly subscribe to our channel for any updates, so that once we upload any video, automatically you'll be informed on it. Thanks.